Hello, my name is Nicole and I am a management accountant, and today I'd like to show you how to perform a VAT reconciliation. I am a SEMA associate and I've also been in the financial services industry for the past 5 years, and I've also studied for about 6 years, so the information that I give you today is coming from a reliable source, and I trust that it's going to be useful for your purposes. Okay, so I'm going to start with the objectives of a VAT reconciliation, and then I'm going to go into a little bit more of a technical sphere and show you how to actually perform the VAT reconciliation, and also show you how to get the most out of your VAT reconciliation. Alright, so the objectives of a VAT reconciliation is to ensure that input and output VAT have been declared to SARS in the relevant tax year. So this is very, very important, especially for the output VAT, because as soon as your output VAT doesn't reconcile with the turnover per your financial statements, then there's going to be a red flag on SARS's side, and they're probably going to issue you a supporting document request. The other objectives are that input VAT can be claimed over 5 years, so therefore it's not such a big deal if there is a difference in your input VAT as per your AFS compared to your VAT returns. However, your output VAT needs to be declared in the period that it occurred, and that's extremely important. The fourth objective is to reconcile turnover per your AFS to the turnover declared to SARS. I did mention that briefly above. And then just a note to take note of is that standard rated, exempt, non-supplies and zero rated sales should be declared to SARS on the VAT return. So there's specific places on your VAT return where you can fill in those amounts, and I just like to inform you that that's very important, because if there is a difference between your turnover per your AFS and the turnover per the VAT returns, the exempt and non and zero rated supplies could actually be a reason why there is a difference there. And then also, as I mentioned previously, if there is a difference between your turnover per your AFS, which you filled in on your tax return, and your turnover that you declared on your VAT returns, then SARS will more than likely issue you with an IT14SD, which is basically a supporting document request for a company. And in order to prepare for this IT14SD, you need to have sufficient and adequate reasons as to why you have differences in your output VAT, but also your input VAT. But as I mentioned previously, the output VAT is the most important part. So part of the VAT reconciliation is to prepare for the IT14SD so that we can give SARS as much information as we need to in order for them to condone our differences. Okay, and then the last part is that we always perform a VAT reconciliation before the final VAT return is due for the year, because any differences should be declared or claimed in the final VAT return. So basically what I'm trying to say here is that we need to give the company the benefit of the doubt and always give them as many input claims as they can, and also ensure that their output VAT is declared for that specific financial year. So basically your last VAT period is the period where you can fix any funnies. Okay, so the steps to perform a VAT reconciliation. Before you do anything, please ensure that the processing of your sales and expenses are correctly recorded in your general ledger. So if you use Pastel, it's very, very important to pull a trial balance and just to test the trial balance for reasonability to ensure that all your GL accounts are valid, accurate, and complete. If they are not valid, accurate, and complete, then your VAT reconciliation is going to be absolutely useless, because the information that you have is not accurate, and therefore your VAT reconciliation won't be accurate. So before you start, please just drill down on all your sales and expenses to ensure that they are all complete and accurate. Then so ensure you use an up-to-date VAT reconciliation spreadsheet. I'm going to show you an example of that. Then you're going to fill in the output VAT and the input VAT as per the VAT return submitted. And please note that capital outputs and input need to be declared separately on the VAT return. So that's just something to note. And then you're going to extract the VAT control detailed ledger from Pastel and paste it into your workbook. So if you use Pastel, Sage 1 or 0 or QuickBooks, whatever you use, just extract your VAT control from that program and paste it into your Excel workbook. Okay, and then the next few steps, I actually think it's going to be better for me to show you on the actual Excel spreadsheet as opposed to me just reading off this PowerPoint presentation. So I'm going to open my Excel spreadsheet now. Okay, so as you can see, the VAT recon is split into two sections. This side here is for your VAT or turnover that's submitted as per your VAT 201s, and this side over here is what your detailed ledger says, or what your AFS is eventually going to say. So we need to ensure that your detailed ledger reconciles with what is submitted to SARS and vice versa. And if there are differences, those differences need to be investigated, and we need to ensure that we have valid reasons for those differences. Okay, so I'm going to start on this side, on the left side of the VAT recon, because this is the easiest part. So what you're going to do is you're going to print all your VAT 201s for the specific financial year, and you're literally just going to fill in your standard rated and your capital and your bad debts for your VAT output. So these three columns here, you'll get those off your VAT 201s, and then your exclusive and your standard rated sales, that's a calculation. As you can see, it automatically calculates it for you. Then for your VAT input, you are going to look at your VAT 201s as well for this, and you're just going to slot in these amounts exactly as they stand on your VAT 201. Okay, and then the difference between the output and the input will give you the VAT payable. And then I just need you to check for me that your VAT payable reconciles to your VAT statement of account, just to ensure that you did pay the correct amount of VAT. Okay, so this is the easy side of the VAT recon. This side of the VAT recon is where a lot of people get a little bit confused, and so I just like to hopefully ensure that I can show you exactly what it means and exactly how to do it. Okay, so before you can populate this side of the VAT reconciliation, you need to pull your actual VAT control. So I normally paste my VAT control in another tab on my Excel spreadsheet, and then I basically filter it according to purchases, sales, general journal, cash book payments, etc. So I filter it according to the entry type, and I'm just going to show you one quick example of how to filter your VAT control to ensure that you get the best results. So literally I'm going to filter for the May-June VAT period. So firstly, I'm going to filter it according to my payments, and I'm going to check that all my payments are accurate. So for instance, in this one over here, this was my payment to SARS, so I've taken that out of my VAT control because I know that that doesn't affect my actual VAT payable for the specific period. And then my other cash book payments, that amount does look reasonable. I do know this client, so I can say that that cash book payments is reasonable. Then I'm going to have a look at my sales credits. So any sales credits normally appear on the debit side because it's reducing sales, and because it's on the debit side, we need to move it over to the credit side and put a negative on it because the credit side pertains to your output VAT. So I've already moved these over and made them negative. As we know, sales credits reduces your sales, and therefore it will reduce your output VAT, and therefore these amounts are negative. Then I'm going to have a look at my purchase returns. So as we know, purchase returns are basically when you return goods to your supplier, and these reduce your input VAT. So they normally appear on the credit side of the VAT control, but when we're doing our VAT recon, we need to move them onto the debit side, and we need to make them a negative so that we can have a net result of our input VAT is accurate, because it is reduced by the purchase returns. Okay, once you've sorted through all the entry types and you're sure that everything is correct, you're going to total up your output and your input VAT for the month. So for instance, I'm reporting for May and June, so I've basically totaled the input VAT for this period here, which is 73, and then I've totaled the output VAT as well, and it's 172,000. Then I'm going to go to my VAT recon, and I'm going to fill in those amounts over here. So literally this amount links to that total that I just showed you, and this amount links to the total that I just showed you. All the other cells are calculated based on formulas in the cells. So the only part that you really need to fill in is these amounts here, and most of the calculations are done on this tab over here. Okay, and then on this side of the VAT recon, I'm just going to move over a little bit here. So basically your VAT payable is the difference between your output and your input. So this is how much VAT you need to pay at this point in time. However, you actually paid 109,000, so therefore you've actually overpaid your VAT. So that difference needs to be determined. Over here you can see that you actually should have paid 98,000, however you paid 100,000. So those differences all need to be you need to drill down into your GL and compare those with your actual VAT submitted in the particular month to see where the differences are. Okay, and then on this side here, this is your balance per your GL. So this is normally your opening balance per your VAT control, and this is your closing balance. If these two amounts reconcile to your VAT control, then you know that you've taken into account all your sales and your expenses. So this is very important. This column here, the VAT actually paid, is the VAT that's paid in the specific period. So this, in other words, this VAT actually paid relates to the previous period's VAT, and this period, as you can see, relates to the previous period's VAT, is because this VAT actually paid is how it stands in your control account, and in order for your control account to reconcile, these amounts need to be put into the relevant periods. Okay, so the differences that have come out here, as you can see, there's quite a few differences, but in the end, you can see over here is that my VAT input difference is 90 Rand and my VAT output difference is 6 cents, sorry. So basically, the reason for that is that my opening balances, there were things that happened in the previous financial year, adjustments that were made by the auditors, and they requested that we pass these audit journals and submit the VAT in the 2017 financial year, but the actual impact or the actual journal occurred in the 2016 financial year, this is actually the 2016 financial year, so these journals would appear in the 2015 financial year. But because we were requested by the audit department to actually claim them in this, or declare them rather, in this financial year, there is an opening balance difference. And as you can see, there's an opening balance difference of 59, and this over here, the 59, is, it basically comes out in the wash, so your difference is 0. And then same thing with the input. Ultimately, at the end of your VAT reconciliation, there's basically just going to be a whole bunch of timing differences here, and at the end of it, you should have a difference of a very small amount. Now, remember in the objectives I said that you should probably perform your VAT reconciliation in your second last VAT period to see what your differences are so that you can actually fix it in your last VAT period. So this amount here, this 4,000 Rand, I'd probably picked it up already from here, from the previous VAT returns, and I fixed it in this final VAT return. Okay, so it's very important just to bear in mind that those differences should come out in the wash at the end of the day, because it should just be a whole bunch of timing differences, but sometimes it doesn't come out and more investigation needs to be done. Okay, and that's pretty much the VAT reconciliation training. If you have any questions or any comments, please feel free to leave them on our YouTube channel and we'll get back to you as soon as possible. Thank you. Bye bye.